if you are trying forex trading in 2026 and you are still doing this, you are going to quit very soon. Let me show you how 99% of forex traders fail. Welcome to the channel, guys. This is Chief with FX. In case you just come to the channel for the first time, all we do on this channel is discuss tips that help forex traders pay profitably and do weekly recap as well. So let me show you why 90% of forex traders fail. Let's go. So we're going to be discussing the reason why 90% of forex traders fail. Reason why 90% of trader. So I'm going to be discussing we're going to discuss some reason why forex trader fail, and the number one reason. So let me just change the color of this text. These are the 5 major reasons why forex trader fail. One, we have the overtrading. 2, there is no higher time frame bias where there's structure, no market structure. So you're just going to put it there like market structure. So there's no market structure, no market structure. You just trade. So there's no market structure, no direction. You just go like 50-minute time frame. You're just trading on 50-minute time. So you can be trading on a 50-minute time frame and you're already trading into a key level on the higher time frame and you don't know all of a sudden the market reverse against you, which ideally happened to me as well. And these are the way I'm going to be discussing how I was able to overcome that. 2, ignoring liquidity. Actually, liquidity is the one that sponsors the movement of markets. That bias to pay out very well. There's need of liquidity because that is the strength of the market. 2, once you want to enter a trade, now the first point on my list here is once you want to enter a trade, before you enter a trade, make sure you actually check what the news is saying. Though this is not really important, I don't really check the news. Once my analysis and everything is correct, I'm free to trade. But most time, if I'm trying to trade in a particular day, I check if there's any news for that day because that might be a catalyst for that trade not to play out. And the last one on my list, which is the 5th one here, is no street stop loss discipline. You actually enter a trade. Let's say you enter a trade here. Let's say price was like this, so and like this. So you enter a trade somewhere here, and you're going here. So you enter the trade here, and ideally you enter the trade like this. And for a buy, you enter the trade here. Ideally, your stop loss should come below the last low or something like this, and you go for your target. But while you see the trade playing like against you, you are not adjusting your stop loss. The way you are supposed to leave the stop loss, let it eat so you have others, you still have your remaining funds to trade for the other days. You keep extending it till you blow your account. So these are just the things, common mistakes which every forex trader do, and I'm going to be explaining how you can actually overcome this, which is the first one, over trading. Set a rule for yourself, like in a trading week. Set a rule for yourself, like in this trading week, I only want to reach 60% of my account. Let's say you're trading, no matter the account you're trading, let's say you're trading a $1,000 account. Set the rule that okay, for the whole of this week, I want to reach only $100 on this account. Once I'm off $100, I'm done for the week. That way you can overcome over trading, which is very important. That is even one of the major things you need to write down. Know the numbers of trades you want to take in a week. And for the numbers of trades you want to take in a week, diversify your risk, like split your risk on each trade. So let's say you are looking when you are doing your weekend analysis, maybe you are looking at about 3 setups and you are willing to reach $100. So you can just split it like 40, 40, 20, or you split 30, 30, 40. So which is going to help you master your emotion as well. That is going to also help you. So the second one is no higher time frame bias. So this one is actually very, very important. There is need for top-down analysis. Anytime you want to approach a new trading week, make sure you start your analysis from the weekly time frame. If you are approaching a new trading month, make sure you start from the monthly time frame. If you are approaching a new trading day, make sure you start from the daily time frame. So this is how you bring it down to the what time frame. You can easily spot, okay, which area is market going to go for? Is it going to buy first or sell first? So this is actually going to help you. The higher time frame bias is very, very important, and that is where you need a market structure. All right. So before you want to place any trade at your entry, make sure there's liquidity, because if there's no liquidity that's sponsoring price to your POI, it's like 80% sure that that POI is going to fail, or let me even say 90% sure that that POI is going to fail. Or if there's liquidity that is actually what will magnet price to your POI, relative price tap the POI, then price is going to move. I'm going to show you example of this market structure, weekly market structure, and liquidity on this particular JP225 now, which is the trade I'm presently on. And this trade is actually the one that's saving my account presently. I'm also about to build an account, but this trade is actually saving it right now. So let me show you before we go to the next point. All right, so JP225 right here in front of you, as you can see. But presently on this trade, that particular night, when I say there is need for liquidity before you decide you want to enter any trade, make sure liquidity is taken and wait for market structure confirmation, like an entry confirmation for the trade. So, for example, on this JP225 right now, so I analyze this pair at the time. I could see some wicks gathering here, so you can see these are liquidity. Anyway, you see wicks like this. This is with this. So all these areas is liquidity, and you can see this is my POI, this bearish candle here, and price tapped into it. I didn't enter it immediately. I needed a confirmation. So which what I waited for price to be out of that zone, and it left immediately. It left of that zone. It actually left this another order block here, which now it tapped into it. By the time it tapped into it, this was Friday weekend. So, and I did not trade this kind of setup on Friday, so I have to wait till Monday. So on Monday morning, which is what around, if I go to 12 time frame presently, so this was around 12. You can see when market open 12. So I was waiting for price to tap back into this area, and unfortunately I missed this setup because while waiting for this confirmation, I got carried away. I slept off, but it was actually in the night, and waking up the next morning, market was somewhere around here. So I didn't chase the price because I don't chase price. Once it's gone, I look for another entry. I know it's actually going to present another entry, and which was ideally price throughout that day, moved that day, and I know this was the last high. Which was my first target, if price broke this high above, it's actually going to come and retest it, because this is very interesting area, right? And immediately price broke above it here, which was on Tuesday. Market open here, price closed here somewhere around Tuesday. And market open, market moved up to the upside and immediately came down, tested that same area. And the first candle that closed on the 30 minutes time frame was what I used as my entry, put my stop loss on that same area, which you can see price actually was delivered presently. So I'm targeting somewhere here, which is a risk for 1 to 7, and presently this price is up to about 1 to 6 already, just about 1% to go, and which even if this price is to retrace against me, my take loss is somewhere around this region. I'm still safe on this place. So this is how you manage your trade. Once you analyze the time frame, you get your buyers. So you can see when I was analyzing on this particular pair, I started from the what? For the week, I started from the weekly time frame. So let me show you what I did here on the weekly time frame. It's very, very simple. What I did here was, this was the previous week, right? This was the previous week, and this is the new week we are in now. So you can see how big this week is. So for that previous week, this was the last high that price created here. This was the last high, and this was the last low. All right. Now this particular low that was here, so I have to check in between which one is price going to attract first. Is it this particular low here, this one, or so sorry for my mouse, is it this particular low or this particular high that is here? So checking from this higher time frame, I could actually see that price actually was closed above this high that is here, went up, then slowed down a little bit, and this or from this week one here closed inside of this candle. It came down, couldn't close below it, then closed inside of this candle. Now, if you have to do the measurement, which one is close to price taking out first? Which area is close to price taking out first? You see this high here or this particular low here? It's actually this one. So here, price is going to what? Get magnets to the one that's close to it, the closest one, which is this high. And what happened there? Price. So here I've gotten my buyers. Then I can move to the daily time frame, start looking for an entry. higher time frame bias. So we had a higher time frame bias and understand the market structure. So the market structure is actually what's in an uptrend. So which is what I'm just looking for here. What I'm looking for is continuation for this option because you can see the market is very, very, very bullish. So now we've been able to identify the direction of the higher time frame and also the market structure. Now what we actually discuss again is ignoring liquidity. So you can actually see as well that liquidity close to this guy is more closer than one to this down, which means what price actually going to continue shooting immediately price open the following week. Probably I just see a little retracement into a lower time frame key levels and what price we approach all these liquidity that we are down here. That is for continuation. So which we are able to what also we are not ignoring liquidity here. We are also targeting liquidity. Right. So these are just the three major points highlighted now. So let me take this one down. So then what exactly what if I go to the daily time frame now, let's check what happened on the daily time frame. So looking at this on the daily time frame, you can clearly see what this was the area I marked. So this was the low liquidity downside, and this was the previous week close somewhere here, this particular area here. And if you look at this, it's actually another block right here. So, but for me to use the whole of this other block on the daily time frame, I don't actually trade on the daily time frame. So I go lower in 4 hours time frame and try to see the structure that is there. And I now use the body of this other block that is here. You can see this candle here is an inner back to this one. And this is also what a CID change statement. So I'm actually dropping the video and explaining in details what CID really means. But let's continue with the video. And so which I just targeted this video that since this was where Friday closed, price will likely be visited again. And which I just put a order there and here. So I made this entry and now I got in this high test of it and the test of it. But the real information here was this was actually finding this would be a very beautiful trade and was just targeting this actually Fibonacci extension, this green bar here. I can see price is completely around that region. So just very close to the TP. So this is how you actually build up the story during the weekend, even before the market open for the week. So you have to be very clear of what you're looking for the coming week, even before that week kicks off, so you don't get in trap, right? So this is just all I did, and this is how you can also what increase your win rate as well. So I didn't just do it on JP 225. I also did it on US30. Actually, for US30, this pair has been on my watch list for a very, very long time. And so, first thing I try to understand what is happening on the weekly time frame for the week. Though I've analyzed this particular pair over 2 weeks, over a week now. So, what I did really was I could see that we have a market structure to the upside. This is a higher high. So, this is a break of structure here, this area. So using the market structure, here we had a break of structure. All right. So having a break of structure like this, what is next thing I expected? I need to see price pull back to a key zone. All right, to a key zone. Now the former area that markets reacted from to break the structure was this area. So if I go to the lower time frame, you will actually see how this story is building up and you feel like maybe price is coming back here again. But one thing you have to understand about market structure is any low that break the structure, price should never come back to that low. If that low come back to and price take out that low, that is a change in trend. That's the first thing you need to understand. So I could understand that. That's the first thing. And for that, about 2 weeks, so this price dropped here, especially to drop here, didn't come there, go again, drop there, didn't come there. Not until this coming week, when this week was about to open, so I also did the math again, check this liquidity at this top here, also check the one that is this down. Which one is actually market going to approach first? So which, if you check the trend of the market, these are not trends. But if you count the waves of how this market is consolidating, you actually see about 1, 2, 3 kind for consolidation. You actually see 1, 2, 3 for consolidation. So which means you have to have about 1, 2, 3 consolidation, which is what price actually going to approach this one that is down here before going for this upper side. But I don't even need to get to this upper side. All I need is just to take out this previous week high. That is my target. So now I have a direction weekly bias. So now I go to the daily time frame. On the daily time frame, so what I just did there was you cannot see the PO high until I go lower in time frame. So on the daily time frame, I also try to understand this was the area where we had a break of structure, and here we had a lot of consolidation. So market was tapped into this PO high, shoot up. So the low that broke this structure was actually this low. But that doesn't mean this is the low I'm targeting back, because if I go lower in time frame, you're actually going to see the reason this is not the low I'm going to be using as my bias. So in my community, when I drop this setup, most of them were saying like this is the low that is going to trigger the market. But reading market structure very well, I understand it will not the low. So which take me to the forward time frame. So let me just open that on forward time frame. So in the forward time frame, why I didn't choose this low here was because when price was going, stocks at this idea rejected, it tapped into this PO high. You can see this was a order block and what price tapped into it, and this was tap that break the structure above. It was this tapping here that broke the structure above, which now this become the low that take out that structure, this particular low. So this is the reason why I'm more interested in this low, because this was the low that took out this particular structure that we have here. All right. So now price was now started consolidating. We expect price to drop back because this was the only area we even had a few high. So there's no any other block. All you can see is a value gap. So the only area that there's a value gap and also this fair value gap another block is this area. So this is liquidity actually attracting this market. And market was started building up its own liquidity. You see it came down, drop weeks, went up, drop weeks, went up, drop weeks, went up, drop weeks, until it now finally was boom, tapped into this area. So when it tapped into this area, that was market open. That was market about to close on Friday to our goal, but I will not trade this market on Friday. I believe no matter where price is on Friday, because it was Friday afternoon. So no matter where it is in that Friday afternoon, when Monday market open, it's still going to remain in the same position until London section to off. So when London section, when Asia section open, this was where market is. I just look at it, and this particular pair is US30, so it actually falls. It's actually very good trading this pair on doing the London or New York section, not like on the JP25, JP225. That one is actually a Japanese stocks, so it's actually good for the Japanese section. That's why I see that it moves very fast during the Japanese section. So coming here, I understand what I just waited for is what this was the low that market created on Friday, this particular one. What I waited for was I need to see a sweep of that low, which is going to take me to the mid region of this zone I have in the mid region, and what market stretch it to the upside. Immediately swept it, push back above it, and close back above the region. So that was my confirmation immediately. And um this was around 8 a.m. in the morning. That's London session. So I just entered the trade and what I let it make sure my stop loss remain below this zone here. This um stretch here remain below it, and what price was manipulating and eventually what shoot out. So when price got here, it stocks a little bit because this was actually the mid range where price ranged for a very long period of time. So you can see this was the area where it was ranging. This is why actual distribution took place. So it stocks here, rejected. For one candle, 130 minutes candle went to this area, rejected back down, went up again. When it was going up again, that was when I break even this trade and like whatever is happening, I'm free. And now you can see finally it has closed above it and we are actually approaching this step, which was I just want a sweep of this range that we have here. This was the highest high. So I just want a sweep of it, which is giving me a risk reward of 1 to 8. It's enough for me. I don't need to target a risk reward of 1 to 40, 1 to 30. Just risk reward of 1 to what my setup is 1 to 5, 1 to 8. So this is just these two trades is what I'm now using to revise this account as almost done. So you can actually see the account. I'll just need to drop the picture on this side. It's just these two traders reviving this account from US30 and JPY 500. Actually, they dropped this trade in my community, I think February 18, so you can check. This is actually the post here, dropped February 18, and actually also dropped it that morning when it's about to kick off and said, I'm waiting for confirmation. And after the confirmation, I also confirmed that I'm about to enter the trade, and you can see the trade is playing out very, very fine. So which I'm actually halfway now, halfway. So this is how you can build a story during the weekend, even before the week's open. So you already know what you're looking for, and this is how you can become a profitable forex trader in 2026. This is very, very important. Make sure you always do your analysis from the weekly time frame for every new week, for every new day start from the daily, from every new month start from the month time frame. And trust me, if you do this consistently, you're going to actually become a profitable forex trader. So if you find value in this video, you want to support that content, drop a like, and don't forget to click on the notification bell so you don't get alerted when I drop awesome content like this. And I catch you in the other video. Peace out.